And now, in studio, bringing his Midwest values from the Show Me State to the land of San Diego. He's a triple threat, licensed as an attorney, mortgage broker, and a top producing realtor who's crushing the competition. Here to deliver you what's happening in the trenches of the market. Your host, Michael Gaddis.
Welcome back to the Michael Gaddis Show. I am Michael Gaddis of FrontierLoanGroup.com, and I am here to talk about the top 10 questions that the FHA gets about reverse mortgages. And right during the break, Paul and I were talking a little bit about just how bad the name reverse mortgage is, because it's a very bad marketing name. I mean, the HECM is a much better name, but people get turned off about the product just because of the name, and it's ridiculous.
It's one of those things where you only get one chance to make the first impression, and just the name reverse mortgage makes a bad first impression.
It does make a bad first impression, and I think it's kind of I get it. It's just it's marketing, but it's one of those things where it's the same product, but you call it two different things, and all of a sudden people are severely, increasingly interested in it, but the other one, they're like, no.
It's like tomato, tomato.
That's exactly what it is, and, it is what it is. And so, I use the terms interchangeably. Sometimes I'll call it a HECM, sometimes I'll call it home equity conversion mortgage, but that's a lot to say in radio. Eats up all my time. And sometimes I call it a reverse mortgage. But they're all basically the same. So anyway, I'm going to go through some of the questions that the HUD has on their website as the most frequently asked questions. Number one, basically, what is a reverse mortgage? So a reverse mortgage basically is a special type of loan that lets you convert a portion of the equity in your home into cash. The equity that you built up over years of making mortgage payments can be paid to you or used to pay off your existing loan and eliminate your mortgage payment. Although you would still be responsible for your property taxes and insurance. I have to make sure I say that because the CFPB says that I have to make sure I am very clear about that. So if you get a reverse mortgage and you eliminate your mortgage payment, you still are responsible for your property taxes and insurance and any ancillary charges. Number two question on the HUD website, can I qualify for FHA's HECM reverse mortgage? So here's the basic requirements for qualification. One, you have to be over the age of 62. You have to own your home outright, or you have to have a significant amount of equity in it, and it has to be your personal residence, your primary residence. It can't be a rental, it can't be a second home, it has to be your primary residence. So one of the requirements of a HECM is that you have to attend a counseling session, an independent third-party counseling session. Now, I'm a real big believer in that counseling session because I think everyone should have an unbiased, kind of a resource to basically make sure that you're making a fully educated decision. Now, I will tell you that some of those counseling sessions are not as informative as others, and I will also tell you that based upon my experience with my clients, I will tell you 1,000 times more information than they will, but they will still basically ratify the basics of what I'm telling you. Number three question on the HUD website, can I apply for a HECM even if I did not buy my present house with FHA mortgage insurance? The answer is absolutely you can. So the fact that you do not have an FHA loan right now has nothing to do with if you can get a HECM through the FHA. The next question is what types of homes are eligible? So to be eligible for the FHA HECM, your home must be a single-family home or a 2 to 4 unit home with 1 unit occupied by the borrower. And HUD-approved condominiums and manufactured homes that meet FHA requirements are also eligible. And that is a question I get asked a lot about the manufactured house. So, if you have a manufactured home and you're interested in the HECM, you can contact me at Michael@FrontierLoanGroup.com. That's Michael@FrontierLoanGroup.com, and I can kind of go through the requirements of that with you. Number 5 question: What are the differences between a reverse mortgage and a home equity loan? And I think we've addressed that very, very thoroughly in the second segment today, so I will not necessarily go through that question. Question number 6: Will we have an estate that we can leave to heirs? And the answer is absolutely you will. When the home is sold or no longer used as a primary residence, any equity left in the home goes to you. So you do have to pay off the existing note as you would with any mortgage, but anything above and beyond that that is left, you can leave to the estate. So, you know, it's one of those things where you are using your equity when you have a HECM. When you have a HECM, basically you're deferring your payments. Now, what I tell people, it's kind of like this. If you have to make a house payment, and you're, let's say, 75 years old, and you have 20 years left on your loan, and let's say your payment is $1,100 a month, you have to make a payment, whether you make it, write a check for it out of your net disposable income, or you defer it to your principal. However, not having to make the payment out of your net disposable income allows you to live a greater quality of life. So you're making the payment one way or another. In this instance, you're deferring it. Now, to be fair, yes, when you do defer your payment, you pay interest on that. But, you know, I guess you have to weigh the pros and the considerations, and the flexibility that it gives you, and the ability it gives you to free up all of your resources, to me, is an incredible feature of this particular loan product. Number 7, how much money can I get from my home? Well, how reverse mortgages and HECMs, we'll call them, as I keep interchanging those terms for you, how they are basically determined is based upon the appraised value of your house times a factor based upon your age. So let me give you an example. A 62-year-old would be able to, you would basically take your appraised value of your house times 52.4%. So if you are 62 years old, you can borrow 52.4%. If you are 70, you can borrow 57.6%. If you are 80, you can borrow 65.7%. So what you see is that as you get older, you can borrow more money because it's based upon your life expectancy. So if you're 80 years old, your life expectancy is lower than if you're 62, so it allows you to utilize more of the built-up equity in your home. So that's the answer. So that's how we determine how much you could potentially borrow in a reverse mortgage. The next question that's a frequently asked question on the HUD website is, should I use an estate planning service to find a reverse mortgage lender? And what this particular answer on the HUD says is FHA does not recommend using any service that charges a fee for referring a borrower to an FHA approved lender. So in other words, if anybody is saying, hey, look, you pay us a fee and we'll refer you to somebody, don't do it. You don't need to pay that fee. You can find someone on your own. Either you can Google it, or you can just, you know, look around, and I'm sure you're probably being bombarded by mail anyway. But the key is this: find somebody who's going to take the time to educate you. Find someone, because as I mentioned in a show a few weeks ago, the 81-year-old woman that I had in Oceanside that called me because she was using a company, she didn't feel comfortable with it because they just kept pressuring her, and she said that they're not answering her questions and just glossing over the answers. So when I spoke to her, I asked her what her questions were, I answered them, and she goes, well, I wish they just would have told me that. And the reason they didn't tell her is probably because it was something that they didn't really want her to know so much. But in her mind, she didn't care necessarily about it. She just wanted to understand it. And the key is to always understand what you're doing. So find somebody who does this for a living that really knows what they're doing and is going to take the time to basically educate you, as long as it takes. Whether it takes 30 minutes or 3 hours, they need to take the time to educate you. And then, how do I receive my payments? There's a lot of different ways. You could take it as a lump sum. You could take it as a 10-year payment, a term payment, a line of credit. They have what's called a modified tenure and a modified term. There's a lot of different. It's the most flexible loan product on the planet. You can do a lot of different things with it. And you know what? I might even dedicate an entire segment, maybe a show, to going through, you know, all the different payment ways that you can receive your payments. And the last question is, what if I change my mind and no longer want the loan after I go to closing? You have a 3-day right of rescission. Basically, if you sign loan docs, you have 3 days to change your mind. If you notify escrow that you change your mind, you're out. So you are not committed until 3 days after you sign those documents. Well, I want to thank everyone for listening today, and I want to thank Paul for coming up with that history of Memorial Day for us. And I hope you guys enjoyed the show. And I will be back here next Wednesday to talk about anything and everything related to real estate. You're listening to the Michael Gaddis Show on AM 1170, The Answer. We're done.
Good job, Mike. That was pretty impressive. Then everybody wanted, I was going like, don't text me now. There we go. Mike West goes, why would anybody want a large or big beamer? Because he has glasses. Or you said we come in tomorrow at 12:55 a.m.
AM, yeah.
Mm.